What is going on, my friends, and welcome back to the Crypto Catch-Up. Of course, your number one place to catch up on crypto. Well, last week we saw over $700 million worth of outflows from the whales, leading a lot of investors to not really know what's going on. And so in today's video, I want to talk a little bit about exactly what's going on, catch up on what I'm doing, and much more. And so with that said, let's not waste any more time at all, my friends, and let's catch up on crypto. Now, don't forget, guys, if you do use the Margex link to sign up down below, you're going to get access to a $500,000 KASPA airdrop for those of you who do, again, sign up and start trading on their exchange. Now remember, in order to sign up and start trading, you don't need to KYC, meaning you don't need to tell them who you are. You don't need to use a VPN. You can just sign up, start trading, get access to up to $10,000 in bonuses and a $500,000 KASPA airdrop, all available through my affiliate link down below. So make sure that you do go check that out. But overall, looking at this crypto market, what we can see is that things are still in recovery mode. You know, we've been in recovery mode for a while, and it's really just because, of course, Bitcoin is continuing to pull back. Every single time that we're getting these pullbacks, you know, even in moments in which we do have 2 or 3 days of green, we're still just trying to recover, and that's reflected on something like crypto bubbles. Although things like Aave, FET, FTM, HNT, and HTX are doing pretty decent, the majority of this market is still just trying to recoup the losses it's been putting in for the last few months. You know, over the last month, we're still in red for the most part, and the last week, we're still in red for the most part. So even some of the shorter term, you know, indications are showing that we're still in recovery mode. Now, while this market is in recovery mode, people are still rather concerned, right? You look at the crypto fear and greed index, this thing is still sitting around a 26 reading, which is below the halfway point of fear, meaning we're leaning closer towards extreme fear than neutrality. And if you just do zoom in, right? I mean, we can just do this, right? Look how long we've been here. In these moments in which we are just kind of casually sitting somewhat still, slowly descending, people are totally worried as a result of this market. And so, of course, while we are in this recovery mode, I still do think from a macro sense that this is a good time to be dollar cost averaging, because we will recover eventually. That's just the name of the game. We will eventually, but again, it's just like, you just got to be careful right now, right? People get too far ahead of themselves in these recovery periods. When the market's starting to pick back up a little bit and everyone's like, oh, we're good. We had 2-3 days of green. Now we're going to immediately break back up to new highs, so they go long and then they get liquidated, and it's very annoying. And you can say it's happening literally right now. If we do go out to the liquidation map on the 1 day, look how many liquidations will happen to the downside rather than the upside. This means that people will get liquidated if the market goes down, meaning they're going long to the upside on too much leverage. They're overly leveraged right now, betting that the market's just going to do this and continue upwards. And so when we have moments like this in which liquidations do pick up like crazy to the downside, I always just expect that this market's going to pull back, that we're going to see some sort of pullback, some type of double bottom, some type of double down, or maybe literally just a continuation downwards, because this could at the end of the day be a relief rally that does then lead to a continuation towards the bottom side, and there's just nothing that you can really do about that. And so in moments like this in which the market is in general still recovering, but people are getting super volatile in the short term, I kind of just sit back and watch. I don't really do a ton, because at the end of the day, there's really no way of knowing what's going to happen. So I'll just dollar cost average every day, just buy a little bit, and let all the craziness play itself out. Now, in order to add fuel to the craziness, we saw some pretty ugly whale news last week. Last week, we saw $721 million worth of outflows, which was nearly a new record-setting amount of outflows for the week. Now, the way in which that was separated was, of course, 260 to GBTC or Grayscale, 405 to Fidelity, and then about 100 between ARC21 and Bitwise. Now, Fidelity was really the big one of the week because, of course, they're typically pretty bullish, right? Their clients are typically buying, and they are usually in, and so the fact that they are selling and outflowing, of course, was kind of the headline of the week. Now, iShares was another interesting one for the week as well, because, you know, they were just so neutral. You know, it was like around 0. And we've said it pretty consistently here on the channel that in moments like this, in which, let me see if I can make this somewhat bigger. In moments like this, IBIT, is on the far left here. On the days where they have literally 0 flows, there's no inflows, no outflows, we know that that's negative, but they have a buyer of last resort, as Sam from My Financial Friends channel likes to say it. There's a buyer of last resort who likes to go in and buy it up to a point of neutrality. So we know these are technically should be negative weeks, but they don't want them to be negative weeks, and so they're having someone or themselves just buying back whatever is outflowing to keep things neutral. And so, of course, that does mitigate some of the volatility from the whales, of course, but Fidelity doesn't have that going on, right? Fidelity is just letting it get wrecked. Currently, again, as I mentioned before, $405 million worth of outflows just last week alone, putting in a combined $726 million. Now, we saw 643 of that allocated to Bitcoin and another near 100 million of that allocated towards Ethereum, in which those two were pretty much just the leaders of the outflows last week. Now, interestingly enough, those two were the only ones except for Cardano that saw outflows last week. You know, we have multi-asset at 3.4, Solana at 6.2, Litecoin up, short Bitcoin up, which I guess technically could be considered negative if you think about it. XRP at 1, Tron break even, others that around break even are at 1. So interestingly enough, it seems like a lot of the attention was focused on Bitcoin and Ethereum, and of course I know it is technically just due to the fact that that's the two biggest ETFs out, but people were still net positive on some of these other ones. So it is just something to think about, especially when you consider the fact that, you know, a lot of the gainers that we're seeing even today are outside the top 10. It's weird to see that shift right now. It's not usually the time for Bitcoin and altcoins, or for altcoins, especially smaller altcoins, to outperform Bitcoin and ETH, but we do have these little moments where it does happen. So just an interesting thing that I noticed. Now, the way in which this was broken down was actually that we just saw a record broken for outflows, in which we saw 8 straight days of outflows, which totaled out to around 1.18 billion. As you can see here, from August 27th up until September 6th, which was Friday, the last day in which of the week, the work week last week, we saw just an ass whipping, realistically. 100 million, 105, 70, 175, 287 million in outflows, just back to back to back to back, leading a lot of these, you know, a lot of these gains in the market. And it is no surprise why we did see Bitcoin's price pulling back as a result of all of these outflows. But what I would go ahead and say is that in moments like this, it's actually a lot more normal than you would expect, right? Like, you know, I feel like people had to some degree, unrealistic expectations about these ETFs. Like, oh, well, this big money's coming in and they're a lot more stable and they're not going to be selling. They're not going to be doing a whole lot of volatile things or impulsive decisions. They're going to make impulsive decisions just like you and me. Okay. You know, whenever you think about it, I do think over the long term, these types of outflows and these smash outflows out of nowhere are going to slow down because these clients are going to get used to the volatility of crypto. But at the end of the day, this is still new to them. This is still somewhat a new world to them. And in these moments in which they're investing into this new thing, or they're investing for their client, or, you know, this BlackRock, Fidelity, etc., they're investing into this new thing for their client, or their client wants to buy it, whatever the situation is, and then it starts getting real volatile, or maybe they're negative for a couple weeks while, you know, they're not really sure if they want to invest in a crypto or not. It's going to trigger them to have these moments in which they're going to just sell. They're like, you know what, it was worth the try, don't really want anything to do with it, it's too volatile, it's not for me, etc. Like, we're going to see these moments, especially while these ETFs are new. That's just what's going to happen. But I think over the long term, the people who are going to invest through these people, right, BlackRock, Fidelity, ARK21, etc., they're going to be the ones who are a little bit more experienced with the volatility, who are used to it, who understand it, and they're also going to see that over the long term, it's not just going to be something that's just going to immediately disappear and go to absolute zero out of nowhere. And so I think there will be more stability later on, but expecting that right now is a little bit unrealistic because, again, it's new to them just like it could be new to you and I. And so because of that, seeing moments like this, it doesn't really bother me, you know. At the end of the day, the ETFs came out, Bitcoin's price hasn't really done that well in the last 4 or 5 months, and so people are going to want to sell, whether it's the biggest people in the world or the smallest people in the world. People like to get out sometimes, and that's just what they're doing. And so I'm personally not concerned about it. I've told you all on multiple basis that, look, I dollar cost average basically every day of September, just because I think that, you know, or it's not even I think, historically, every time that I've bought every day in September, I've won way more than I've lost. And so I just continue to do that, and it's playing out well for me. We are still seeing, if we go up to liquidations, that a ton of liquidations are set to happen on the 7-day if this market moves upwards, and on the 30-day if this market moves upwards. And so knowing how many liquidations will occur if this market goes up, I'm not even deterred by the fact that we might see a little bit of a pullback in the short term, or that Bitcoin's price might continue through this liquidity zone, maybe towards some of these lower levels, maybe even lose 50K at some point. That doesn't really deter me. I'm not really concerned. I am still continuing to buy towards the bottom side of this structure, still expecting that at some given point we're going to try to retest this top side, you know, up there. So overall, that's just kind of the quick update, quick news about what's going on. Of course, whales are selling, mostly Fidelity. They're the ones doing that big damage. iBit staying somewhat neutral, and of course, as a result, retail investors are still worried, still scared, still making impulsive decisions, and I'm just sitting back, dollar cost averaging, keeping it cool, keeping it chill, not really too worried about it. And so let me know down in the comments below. Remember, I reply to every single comment, or I try to at least. So let me know down below, what's your strategy, what's your plan? Do you have any questions? You can leave that all for me down there. And while you are in the comments, again, don't forget, go sign up for Margex. No KYC, no VPN. Get access to a $500,000 KASPA airdrop and up to $10,000 in bonuses when you do sign up with that link down there. But overall, of course, I hope you guys do have an amazing week, and I can't wait to catch up with you all next time. Peace out, everybody.